hello, and welcome to the midweek Wednesday edition of the Todd Vino Show. I'm Dan Alstrand. Very glad you're able to spend some time with us today. One of the big announcements that came out of the province yesterday has many people talking today. It was the water cooler talk around here yesterday, and I'm assuming that as we start to dig into this and to get to the devil in the detail part of this, there will be more discussions moving forward. And that, of course, yesterday the province announcing a significant change for first-time home buyers, lowering the down payment to 2% from 5%, which is a significant drop, and also backing those mortgages, which means that somebody taking part in this program won't have to pay that mortgage insurance, which is a significant chunk of money when you take a look at it. When it comes to things mortgage, we go to our mortgage guru, of course, the host of Mortgage 101 and mortgage broker extraordinaire. Can I call you that, Clinton?
I don't mind. You can call me whatever you want, as long as you call me, really.
That's Clinton Wilkins, of course. And Clinton, I guess first brush when you saw this kind of come out of the blue yesterday, what were your thoughts on this first-time homebuyer program?
Let me tell you, it was very busy, and I was getting, inquiries from across the country. And I sit on a national board, I think, as you know, Mortgage Professional Canada. I represent Atlantic Canada and the interest of, our industry, consumers, lenders, etc. So let me tell you, a very, very busy day yesterday and into today. I think any change around, enabling homeownership is good for Nova Scotians. For me, obviously, there's some pros to every program and there's cons to every program. And I think really that's what we're going to talk today about, Dan. To give you kind of the nuts and bolts, this is a pilot program. So this is not necessarily something that is going to stay forever. Certainly, it's very exciting. It creates some buzz in the media. Obviously, we're here and a lot of people are talking about it. So the way that the program is going to work is it's going to be run by participating credit unions here in the province of Nova Scotia only. And it's really based for first-time home buyers. Anyone who hasn't owned a home for 4+ years could potentially qualify for the program. And the way that it works is that you're going to make a minimum down payment of 2%. So that means that the credit union, backed by the province of Nova Scotia only, is going to lend the rest of those funds. Obviously, that's great. You don't need a lot of skin in the game. I think overall, when I'm kind of industry person looking at the program, one of my bigger concerns is 2% isn't a lot of skin in the game. But I feel like this pilot is potentially looking to replace the Nova Scotia Down Payment Assistance Program, which we're already running in Nova Scotia. And Nova Scotia was unique. Obviously, different provinces have different programs, but, we had a pretty aggressive program here in Nova Scotia already, where the province of Nova Scotia was lending consumers, first-time home buyers, and only first-time home buyers, 5% of the down payment. Obviously, there's constraints around that program. There's constraints around the new program. For me, as a Nova Scotian and as a taxpayer, I do have concerns that the province of Nova Scotia is backing mortgages for, 25+ years. A lot can change, as we know in the economy. Housing prices across this country are down somewhere around 20%, where in Nova Scotia we have not had these losses. Thank goodness. But I'm not saying that there's not going to maybe be price, changes in the future. And the way that this program will work is the province is going to back these credit unions for losses. We already have a federal agency that is doing the same type of thing, and that has been around since, the war times, the Canadian Mortgage and Housing Corporation, and we have two private insurers. We have Sagen and Canada Guarantee that are providing high ratio insurance to all lenders, including credit unions. And they're the ones that are covering these losses. So for me, the province getting in the, mortgage back game is a little bit concerning. I don't really know. There's
a risk there.
There certainly is a risk for a long, long time.
Right.
The challenge is, and I'm just going to be completely frank, typically the rates at a credit union are higher than you can get at a chartered bank or a mortgage finance company or, through a mortgage broker. We're talking 1 or 2% higher typically. So there is an additional cost of borrowing typically when you go to a credit union in the province of Nova Scotia. Different credit unions across the country obviously have different models, but primarily the cost of funds here at these credit unions are higher than a bank style lender. So I think that's one thing to take into consideration. The other thing is when you do not have high ratio insurance from CMHC, Sagen, or Canada Guarantee, you can't move your mortgage from lender to lender. So you will be stuck at this credit union probably for a long, long time. I'm talking like 10 to 15 years likely before you're going to be able to move to another lender.
Right.
You'll only be able to move to another lender when your mortgage is at 80% or less that the market value of the home. So unless we see big property value increases in the near future, the borrowers that are going to participate in this program, just beware. You're going to be stuck with this lender for a long time, and you just will not be able to move.
Lots of caveats attached to this program
For sure.
as well. Household income of $200,000, which I think is good. I think
that's quite aggressive.
Right, it is. And normally we get these programs, and sometimes though that limit is pretty low. But that I think is. That one was
I think that's quite fair, especially for a first-time home buyer. Now there is property value limits as well.
Right. Yeah, $570,000 with an HRM, and then outside, including I think it was Hance. Then the rest of it, $500,000. Now, Clinton, you and I have talked many times about house prices here, and you suggest that about $600,000 is the sweet spot, particularly in HRM. With these. Relatively low, and the minister himself last night I saw on TV was said, yeah, that's going to be tight in HRM. Is that going to put a run on lower priced houses, and are we going to see them perhaps increase because the demand will go up?
I think so. I think those prices are going to increase. As we know, this is a game of supply and demand, and I think this $600,000 and sub $600,000 price point is already has a very high demand. And, if we're going to be entering more borrowers and more buyers into this marketplace, it may drive these prices up, which is going to make it more, I think, prohibitive for some first-time home buyers to get into the market, period. I think we have a very balanced market here. And I do not think that first-time home buyers have as hard of a challenge getting into the marketplace as they do in other areas of the country, like Ontario and BC. I think a lot of first-time home buyers are able to get into the market. Right now, if you get a normal, high-ratio insured mortgage, you need to come up with 5% down. Whether that's from your own resources, whether it's from a gift, whether it's from the Nova Scotia Down Payment Assistance Program, or you're borrowing it from like a line of credit or something like that. Then you can get whatever mortgage you really want from whatever lender. So the difference between putting 5% down and putting 2% down and going with this more restrictive product, I don't know if it's going to be really as much of a game changer as people think. And sometimes, these little quick hits, as we know in the news, sometimes get people riled up, and it's creating some, demand in the marketplace. I can tell you, my phone was blowing up from Instagram and TikTok and Facebook. There's a lot of people who are in the industry, like realtors and lawyers, that are posting, information. And sometimes the information isn't always correct. So I really would urge anybody who's looking to buy a home and they want to get a mortgage, seek the advice of an unbiased mortgage professional. There's obviously a lot of nuances when it comes to mortgage lending. And when we're looking at a file, we can decide, does it make sense for you to go through more of a traditional program, or does, a credit union pilot program like this that the province of Nova Scotia is offering make more sense for you? Because, we need to weigh the pros and cons.
Right. I before I came on the air, I went on to the MLS site just for out of curiosity.
Just to have a little look.
Take a look around, and I'm sure many people have been doing that over the last 24 hours. And I picked a property. It was just outside of HRM. It was $445,000. At 5% down, it was $20-some-odd thousand. When it plug in the 2%, that drops to $9,000. Plus the CMHC insurance fee was $17,000.
Yeah, and that gets capitalized. So there certainly is cost with. And there's going to be pros and cons to both ways, Dan. And I think that's what we really have to take into consideration. Is 2% better than putting down 5%? There's going to be, there's obviously the insurance cost we have to look at, and then there's the increased borrowing cost potentially with the credit union that you need to look at, and it being more restrictive. You're going to be in this home for a long time before you're going to be able to A, move the mortgage, or B, potentially even sell. So I think any time that you're doing any transaction, you need to look at, what do the options look like and what is your best path forward. And, this is going to work for some borrowers. It's not going to work for all. And I would say, and I would venture to guess, the popularity in more rural areas in Nova Scotia is going to be higher.
Right. I think outside of HRM, that number is it works better for the market there.
I think 100%. I think outside HRM, outside of Hance, I think there's going to be an increased, popularity in this program. And I think those rural communities sometimes are better served by credit unions. There's not a lot of bank lenders. There might not be a lot of mortgage brokers. But the borrowers that are here in HRM, I think 5% isn't that, restrictive, especially for the people that are buying a home. And let's be frank. If you don't have that 5% to put down on a home, what happens if something happens to your roof? What happens if something else happens to your home?
You still have to pass the stress test too, right?
You still need to qualify. And as I said, the rate for a credit union typically is 1 or 2% higher than it is with a normal bank lender, plus then 2% to be able to qualify. So, that $200,000 price point, normally, like I think with a bank lender, you can qualify for, up to maybe an $800,000 mortgage, but maybe with this higher rate, maybe $570 is what you can qualify for if you have $200,000 worth of income. Obviously, your debts are also factored into this and into your qualifying.
I know it's only been like a day, and the devil's always in the details with
of course.
These things. But on first brush, is this program better for first-time home buyers, or is the, because I think it still exists, is the down payment program a better option for first-time home buyers? Your opinion?
In my opinion, I think the down payment assistance program is better. It was interest-free. It gives the borrower more options when it comes to actually getting a mortgage. With this new program, I think a borrower with a lower credit profile can likely qualify. And that gives me even more kind of concern, especially with such a low amount of skin in the game.
I think it said on the release
630
or 620. Yeah. So that's
that's a very low barrier to entry. Could a borrower with a 630 credit score qualify for 5% down on a flex down in the Nova Scotia Down Payment Assistance Program? I don't think so.
Clinton, we're out of time. Of course, this coming up weekend, we'll have the latest edition of Mortgage 101. I'm sure we'll probably talk about this.
I'm sure this is going to be a hot button topic here for our weekend show. So I'm sure our borrowers will want to tune in. We're talking about love your home. So maybe you want to improve your home, or what happens when love goes wrong.
Appreciate it, man.
We'll talk to you soon.
That is Clinton Wilkins. Of course, you can find him on his website, and you can listen to him here on the station on Mortgage 101 this coming weekend. And, of course, all the back episodes are available at halifax.citynews.ca.